how all of these cues impact our own markets and the stocks that you should watch for in today's trading session. Ekta, Surbhi and Nigel are all here to take us through the trade setup. Guys, a very good morning to all of you. Ekta, we were just going through the global handover, which definitely looks quite weak.
Well, yes, absolutely. The markets did recover from the lows yesterday, but closed in the red. We had the markets which in fact closed in the red for the second consecutive day. FIIs net sold 1,093 crores, DIIs net bought around 736 crores, so institutions were net sellers yesterday. Now, in terms of cues, markets are definitely in risk-off mode, like you mentioned. The Fed chair has indicated that inflation is too high. They likely require lower economic growth. US Treasury yields have jumped close to that 5% figure, the highest levels that we've seen since 2007. US markets close lower. Asia's in the red. Crude prices are still above $90 per barrel on nagging worries about the Middle East. So this combination obviously doesn't bode well for the Indian market. So the gift Nifty is indicating a lower start. On the lower side, the low for yesterday was 19,512. So that would probably be a near-term support to watch out for. A lot of result reactions: ITC, HUL, United Breweries, Emphasis, Voltas, Equitas, SFB, to name a few. A lot of numbers today as well. Central Bank of India, JSW Steel, L&T Finance Holdings, Laurus Labs, and tomorrow we have ICICI Bank as well as Kotak. So the street will probably position themselves on the banking space and on these two large banks ahead of their numbers tomorrow.
Okay, so lots for us to track, both in terms of the domestic as well as the global cues. Ekta, thanks a lot for that. Let's also talk about all of these stocks, some of which Ekta was mentioning. So we take us through all of the important results that came through post-market close, and a lot from the consumer space.
Yeah, a lot of earnings that came through. Let's start with HUL. It was a good operational performance. The revenues came in at 15,276 crores. Margins came in at 24.2% versus expectations of 23.2%. ITC, it was a strong internals from all the core segments. Cigarettes, the FMCG, EBIT and hotels were a beat versus our estimates. Revenues came in at 16,550 crores. Margins came in at 36.5%. United Breweries, it was a strong revenue growth, but the margins were a miss. Revenues were up 12% and margins came in at 9.8% versus 13%, and the expectation was around 11%. Havells, it was disappointing on all fronts. Weak revenue growth across all the segments. The total revenue growth was 6% on a year-on-year basis. Voltas, good revenue growth, but EBITDA margin disappointment. Revenue growth was 30%. EBITDA was down 30% on a year-on-year basis. Tata Communication, it was a mixed quarter. Again, revenue beat, but margins were lower. Revenues were up 2.1% sequentially and up 10% on a year-on-year basis. Emphasis, the revenues were up 0.75% and EBIT margins were flat at 15.5%. Other companies that will react to numbers: Jindal Stainless, Metro, Cyient and Equitas Small Finance Bank.
Okay, that is a lot for us to track. Surbhi, thanks a lot for taking us through all of those individual stocks and the kinds of earnings that did come through from there. Let's get in Nigel now to talk about all of the cues from the futures and options space. Nigel, looks like we could open at that 19,530 kind of mark with that 100-point gap down that we have. How's it looking from there?
Well, Pavitra, we are in that range, 19,500 to around 19,800, 19,850. So you've been buying the dips, you've been making money, but also you need to sell at the top as well, and that's what's being played out. So even bounces are getting sold into. In yesterday's trading session, well, you had very mild shorts that got added. On the FIs, on the index futures, well, the country remained net short with close to 71% of their positions on the short side. Since we're starting a new contract, yesterday was Nifty weekly expiry that played out. So you have two strikes that are very, very active and have the highest open interest. On the downside, 19,500 put. The total open interest is around 73 lakh shares. That's the total open interest that we're talking about, not open interest change. And on the upper end, it's 19,800 call. Well, that is the total open interest is close to around 73 lakh shares. So just punching in those numbers, since the 19,500 mark has the highest open interest, and yesterday we almost went to that mark, it's the support level comes in out there. At higher levels, you have the 20 and the 50 DMA, which will be a bit of a resistance. The Nifty Bank, well, yesterday it did bounce from the day's low, but it came off as well, and it ended pat in the middle of the day's trading range. So those are the two markers, 20 and 200 DMA. Well, I'll tell you what, if you're a brave heart, you can look to buy that dip today. But also, if you get that bounce, you need to square off your position. I think going by the global cues, you don't want to carry an overnight position into this weekend. Back to you.
All right, Nigel, thanks a lot for taking us through those cues. With that, we're going to get into a short break. On the other side, we're going to discuss the conflict in West Asia, which is only escalating. And we're also going to talk about what this has meant for the entire commodities pack. Stay tuned for that.